Disney earnings, everybody's waiting for those. Lori, what are the results?
Okay, so it's a mixed picture. In the after-hour session, Disney is down 2%. So at first blush, investors not pleased with this report. Let me give you the numbers. $1.20 per share. So that's better than the $1.14 per share analysts were looking for from Disney in the third quarter. Revenue is soft. This is the problem. $13.5 billion is what Disney's reporting versus the street expectation of $13.57. And reading, obviously, everybody's talking about the Star Wars Force Awakens coming out next month. So much excitement, anticipation, but there's also been a lot of concern about the cable unit, ESPN. You know, Disney, of course, owns ESPN. They have these tremendous contracts with the major sporting leagues, and cable affiliate revenue has been soft. They've been reporting declining numbers on that front. So that may be the problem there. I'm continuing to look into it, and I'll get back to you.
They've been overspending for those contracts at ESPN.
Exactly.
That's the problem. Lori, thank you very much. Melissa.
Okay, our panel is back along with entertainment reporter and In Touch Weekly senior editor Kim Serafin. Kim, let me ask you, I mean, a lot of the focus right now is on that cash cow ESPN, which has always been such a revenue generator for the company. Now, you know, they warned earlier of a modest decline as more millennials and younger people disconnect and just go directly online and aren't getting cable at all. How big of a drag do you think this is going to be on the company?
Yeah, I mean, you're right. Exactly. There are so many people. If you're under the age of 25, you probably don't have cable. You do everything by streaming. You're watching it on Netflix or Hulu or just completely disconnecting. So that is definitely why maybe you're seeing that. But as you mentioned, Star Wars, you think about the movie franchises that Disney owns, whether it's Pixar or Lucasfilm or Marvel. I mean, that is where it just dominates.
Yeah, Gary, I mean, you look around, everything is Star Wars right now, everywhere you go. I mean, they paid about $4 billion for the franchise. It sounded like a lot at the time. Now it seems like it was a complete bargain. I mean, whether it's clothes, apparel, gadgets, cartoons, they've taken the franchise, they've spread it over everything they have. Disney HD, you know, every kids channel has a Disney series on it now. I mean, I'm sorry, has a Star Wars series on it now. They've exploited Star Wars to the extreme, and still kids can't get enough. Do you like this stock?
I'm okay with the stock. And look, Star Wars is going to be humongous. If there's anything Disney knows how to do is to leverage brands, and that is a gargantuan brand. I'm here in Orlando, Florida. They're rushing it out left and right, all over the place here. But I got to tell you, Disney is not just that. You know, the theme parks are going good guns. They're building this Disney Springs here. It's a whole big retail restaurant complex that is going to be gargantuan also. So I think they're in good shape. The big issue, without a doubt, will be ESPN. It is a cash cow, and that is heading south, and I do not think it's the start. I think it's going to continue going and going. I think there's big trouble with that going forward.
Kimberly, you know, as we said, so they beat on earnings per share, $1.20 versus $1.14. Revenue a little bit light. What would your first question be on the call?
You know, like, why? What is the reason why they missed earnings, and really where was the pinpoint reason? And if it is the ESPN, what are they going to do to rectify that in the next quarter? That would be my first call. But I agree with Gary. I think that this is, you know, I like Disney for the long term. It's in our large cap portfolio. It pays a nice dividend, a decent dividend. And, you know, the Star Wars thing, like you said, Lori, Melissa, it's all over the place, and kids love it. My son has been watching all the Star Wars with my husband until this next one comes out. He's 11 years old. They're loving it. Plus, they're gonna start the groundbreaking next year in the theme parks as well for the Star Wars. So I think there's a big cash cow there.
Yeah. Eric, it does seem like there's a huge revenue opportunity for them. They did get a bargain on that. In the meantime, they do have these other issues. We are looking at theme parks. What would your first question be on the call about the future? What would you want to know about this company?
Well, what do they really think in terms of when cable will be fully cut to where it's going to be significantly accretive to earnings? I think it's going to be a longer time than everyone really thinks. And so I think short term, it's not going to be a big issue. This is a great company, great leadership, great intellectual property. It's a good long term investment, without a doubt. And obviously, Star Wars is going to be fabulous.
Yeah. Gary, you know, if the cable properties continue to deteriorate, is there enough other here? Is there enough other products in order to make this attractive in the long run? It seems like there is. I mean, between the parks, everything they have, the involvement with Netflix and iTunes and everything else, that they are fully integrated in every other platform.
Look, unless the economy really starts to tank, you are dealing with one of the greatest brand names in the world. And I can tell you, when I go to the parks here, the lines are gargantuan, which is a pain in the rear end, but it is what it is. And just remember, they went to these Disney bands, which have really helped them out also. And I just think it's a great future going forward. The problem, once again, is they've banked on ESPN for a long time. And I think the northbound move of ESPN is stopped now, and it's going to head southbound. It just depends on how much and what they're going to do about it.
Gary, you know, you're fancy. You need to get one of those expensive tour guides. If you don't like standing in line, that's how you go. All right, thanks to all four of you.
I've done it a couple of times.
I bet you have.